Hi, my name is Phil Soper. I'm the president and CEO of Royal LePage and a company called Brookfield Real Estate Services. Royal LePage is our 105-year-old national brand. So we released the second quarter Royal LePage House Price Survey and found that the spring market really didn't happen in 2018. It was one of the quietest springs in about a decade. Really low activity levels, and as a result, quite soft home prices in most parts of Canada. The trigger was clearly the federal stress test on access to new mortgages, because for the first time the federal government implemented a tool to slow the real estate market down that impacted not just first-time home buyers, but also move-up buyers, who we call them, people who are still borrowing money to own a home and still have a mortgage, had to apply for a mortgage that was quite a bit higher than the one they actually were going to buy. In other words, the interest rate they were paying didn't change. The price for the home they were buying wasn't changed, but the amount of money they could borrow was reduced. And the concept behind this is to reduce Canadians' indebtedness and reduce risk that if house prices do rise, that some people will fail in meeting their mortgage commitments. So it was probably the biggest, most powerful tool the government has used yet in terms of intervening in the national housing market and trying to slow it. And it was very effective in the first half. We found an interesting thing in the housing type analysis we've done. For the last 4 quarters, condominiums have far outpaced detached homes in terms of their value. 3 groups are bidding up the prices of condominiums. Young people, millennials, and there are many of them, overwhelmingly decide to live in condominium style properties. Baby boomers are finally starting to vacate those big McMansions in the suburbs for condominiums, and that's putting pressure on supply there. And finally, new Canadians, immigrants, come from parts of the world where condominium living is the standard, and they tend to live in condominium style properties. So all 3 groups are putting pressure on condominium supply. And it's also worth noting that although the price is rising, it is much lower than the equivalent price of detached homes. We were the first ones in Canada to call a bottom for this correction that we've occurred in 2018. We saw it in our data a few weeks ago. We're already starting to see activity levels rise and prices rise in our biggest cities. So we expect the spring market that never was to start to appear, albeit in a muted form, through the 3rd quarter. So that's through the summer and into September. And we expect the 4th quarter, which is traditionally quite a quiet time of the year, to be more robust than normal, as some of that pent-up demand caused by the implementation of the mortgage stress test starts to kick in. People have adjusted to the changes. The fact remains we have more people in Canada looking for properties to live in than we have houses for sale.